Hey, what's up everybody, it's Zeb, and make no mistake, Bitcoin is going to create a new all-time high before it gives us a gut-wrenching drop, signaling the start of the next painful bear market. It's like clockwork. Every 4 years, Bitcoin goes through this exhilarating yet terrifying cycle of boom and bust. And right now we're in the midst of another potential bull run. But the big question is, are we nearing the top, or do we still have room to grow? Look, I know you're probably thinking, Zeb, I've heard this all before. Bitcoin's going to the moon. But trust me on this one, understanding where we are in the Bitcoin cycle is crucial if you want to avoid getting re-KT in the next bear market. I'm talking about protecting your hard-earned money and coming out ahead. Stick around until the end to learn how to avoid financial ruin in the next bear market, and instead, sail away into the sunset with financial freedom. And remember, screenshots of your portfolio don't mean a thing unless you actually cash in. Let's dive into the key indicators that can tell us where we are in the cycle and what's coming next. Alright, let's talk about the global M2 money supply. Now, I know what you're thinking. Zeb, you're putting me to sleep already with this economics jargon, but stay with me here because this stuff is actually pretty interesting. In the world of economics, the global M2 money supply is basically a measure of all the cash sloshing around in the global economy. Think of it like the fuel that powers the engine of the financial markets. More fuel, more potential for things to go up, right? When governments print more money, it's like they're pouring gasoline on the fire of the Bitcoin market. And guess what? Right now, central banks around the world are printing money like it's going out of style. We're talking trillions of dollars being injected into the system. And while some of that money might go into stocks, real estate, or even beanie babies, history tells us that a good chunk of it is going to find its way into Bitcoin. Now here's the kicker. We haven't even seen the peak of this money printing bonanza yet. Experts are predicting that the global M2 money supply will continue to grow at an unprecedented rate over the next few years. And if that happens, well, let's just say Bitcoin could be in for one heck of a ride. So, what does this all mean for you? It means that if you're on the sidelines waiting for a dip to buy Bitcoin, you might be waiting a long time. The M2 money supply indicator suggests that there's still plenty of fuel left in the tank for this bull run. Now let's talk about the DXY, also known as the US dollar index. This bad boy measures the strength of the US dollar against a basket of other major currencies, like the euro, the Japanese yen, and the British pound. Think of it like a wrestling match between the US dollar and the rest of the world's currencies. When the DXY is up, it means the US dollar is flexing its muscles and winning the match. When the DXY is down, it means the US dollar is getting its butt kicked. Now here's why this matters for Bitcoin. Historically, Bitcoin has had an inverse relationship with the US dollar. When the dollar is strong, Bitcoin tends to weaken. And when the dollar is weak, Bitcoin tends to rally. Why is that? Well, one theory is that when the dollar is weak, investors see Bitcoin as a safe haven asset. They're basically saying, hey, the US dollar is losing value, so I'm going to park some of my money in Bitcoin where it's more likely to hold its value. So, where does the DXY stand right now? Well, it's been on a bit of a roller coaster ride lately, but the overall trend has been downwards. And if that trend continues, it could be very bullish for Bitcoin. Of course, predicting the future of the US dollar is like trying to predict the weather in March. It's a fool's errand. But by keeping an eye on the DXY, we can get a better sense of which way the wind is blowing for Bitcoin. Alright, let's dive into a fascinating indicator that you might not have heard of before. The copper to gold ratio. Now I know what you're thinking. Zeb, you're really scraping the bottom of the barrel with this one. But trust me, this ratio has a surprisingly strong correlation with Bitcoin's price cycles. So here's the deal. Copper is known as an industrial metal. When the economy is booming, factories are humming, and construction is going through the roof, the demand for copper skyrockets. And when demand goes up, so does the price. Gold, on the other hand, is seen as a safe haven asset. When investors are feeling uncertain about the economy or the stock market, they tend to flock to gold as a way to preserve their wealth. Now, here's where it gets interesting. The copper to gold ratio measures the price of copper relative to the price of gold. When the ratio is high, it means copper is outperforming gold, which is a sign of economic growth and risk appetite. When the ratio is low, it means gold is outperforming copper, which is a sign of economic uncertainty and risk aversion. Historically, Bitcoin has tended to perform well when the copper to gold ratio is rising. Why? Because a rising ratio suggests that investors are feeling bullish about the economy and are more likely to take risks, like investing in Bitcoin. So, where does the ratio stand right now? Well, it's been on an upward trend lately, but it's still relatively low compared to previous Bitcoin bull markets. This suggests that we could still be in the early to mid stages of the current cycle, and there's still room for the ratio to run higher. Chapter 4. Purchasing Managers Index, Gauging the Manufacturing Muscle. Let's talk about the PMI, or Purchasing Managers Index. Now this might sound about as exciting as watching paint dry, but trust me, it's an important one to keep an eye on. Basically, the PMI is a measure of the health of the manufacturing sector. It's like taking the temperature of the global economy. A PMI reading above 50 indicates expansion in the manufacturing sector, while a reading below 50 signals contraction. Now here's why this matters for Bitcoin. Historically, peaks in the PMI have often coincided with tops in Bitcoin's price cycles. Think about it. When the economy is firing on all cylinders and everyone's optimistic, that's usually when Bitcoin is at its most euphoric and expensive. So, where does the PMI stand right now? Well, it's been bouncing around a bit lately, but it's still relatively low compared to previous Bitcoin bull markets. This suggests that we're not quite at peak euphoria yet, and there could still be some room for the PMI to run higher before it rolls over. Chapter 5. Pi Cycle. Top Indicator, Decoding the Bitcoin Clock. Let's unravel the mysteries of the Pi Cycle top indicator. Now this indicator might sound like something out of a science fiction movie, but it's actually based on a pretty simple concept: Bitcoin's historical price cycles. The Pi Cycle top indicator tracks two key moving averages, the 111-day moving average and the 350-day moving average multiplied by 2. When the 111-day moving average crosses above the 350-day x2 moving average, it has historically signaled a market top. Think of it like a clock that tracks Bitcoin's cycles. When the hands of the clock align in a certain way, it's a sign that the market might be getting a little too heated. So, where does the Pi Cycle top indicator stand right now? Well, the good news is that it hasn't flashed a warning signal yet. This suggests that we still have some time before the top is in. Of course, no indicator is perfect, and the Pi Cycle top indicator is no exception. But it's definitely one to keep an eye on as we navigate the wild world of Bitcoin. Chapter 6. RSI Bollinger Band Phases, Riding the Bitcoin Waves. Let's dive into the fascinating world of RSI Bollinger Band Phases. A mouthful of a term, I know, but stick with me here. This method, developed by crypto analyst CryptoCon, breaks down Bitcoin's price cycles into 5 distinct phases, each with its own characteristics and potential trading opportunities. Imagine Bitcoin's price action as a series of waves crashing on a beach. Each wave represents a cycle, and the RSI Bollinger Band phases help us identify where we are within that wave. According to CryptoCon's analysis, we're currently in phase 4, which is typically characterized by a period of consolidation and accumulation before the final surge to the top. Think of it as the calm before the storm. Historically, Bitcoin has experienced its previous cycle tops roughly 44 to 51 weeks after entering phase 4. If this pattern holds true, we could potentially see Bitcoin reach a new all-time high sometime in September or October 2025. Now, it's important to remember that past performance is not necessarily indicative of future results, but by understanding these phases, we can gain valuable insights into the cyclical nature of Bitcoin and potentially make more informed trading decisions. Chapter 7. Stablecoin Market Cap Surge. A bullish omen? Let's talk about stablecoins, the unsung heroes of the cryptocurrency world. Now, stablecoins might not be as glamorous as Bitcoin or Ethereum, but they play a crucial role in the ecosystem. For those who don't know, stablecoins are cryptocurrencies that are pegged to the value of a stable asset, like the US dollar. This makes them ideal for traders and investors who want to park their money in a relatively stable asset during times of market volatility. Now here's why this matters for Bitcoin. A surge in the stablecoin market cap is often seen as a bullish sign for the broader cryptocurrency market. Why? Because it suggests that there's a lot of cash on the sidelines just waiting to be deployed into Bitcoin and other cryptocurrencies. And guess what? The stablecoin market cap has been absolutely exploding lately. We're talking about billions of dollars flowing into stablecoins every week. This is a clear indication that investors are bullish on the future of crypto and are just waiting for the right opportunity to jump back into the market. So, what does this mean for Bitcoin? Well, it could mean that we're in for one heck of a ride once that stablecoin money starts flowing into Bitcoin. The road ahead, navigating Bitcoin's next move. So there you have it. Those are some of the key indicators that I'm watching to get a sense of where Bitcoin might be headed next. Based on the data and indicators, we are likely still mid-cycle, meaning we haven't reached the final euphoric peak yet. But remember, this is just my take on the market. It's important to do your own research, consult with a financial advisor, and make decisions that are right for you. Of course, this is not financial advice. Market conditions can change rapidly. Let me know in the comments. What's your take? Are we mid-cycle, or do you think we've already topped? Drop your thoughts below and don't forget to like and subscribe for more market insights. Thanks for watching.